Hello, everyone. First, and thank you to for being here with us at this webinar, Investor in Web3, episode 4. So I'm just presenting myself. So I'm Eric Olombel. I'm team member of Blockchain HEC, and I would like first to give a special thanks to the prime sponsors. So first, it's a PwC and Stake Capital Group, as well as all the partners who help us in all the organization we have. So HEC alumni, HEC Paris, and all the 100 speakers and companies that already come to shed light on the Web3 universe. In terms of timing, just to explain how it works, we will have 2 blocks. The first blocks when we will have a few questions for the invitees to present themselves, how they feel and how they work in a day-to-day basis. And a second block where we will have a Q&A with questions from the chat room or from other people here. And so to come back with the invitee today, I'm really happy to welcome Marjorie Vigne, who is managing partner at Snaw Ventures, and Ferdinand Tendre from venture with a venture analyst at X Ventures. So today we will try to bring us their vision of the Web3 market, what they are looking for in a startup, how they behave as an investor, what they looking for the project they are investing in, and how they currently invest, especially with the current market situation. So it would be a lot of information to share with you today. So first, I let all guests introduce themselves more precisely. So ladies first. Marjorie, I'll let you the first shot.
Okay, thank you. Hi, everyone. Thank you, Eric, for animating this talk. So I began my career as an entrepreneur. So I founded 2 companies, one ad tech business and one food tech business. I exited, and this is how I became an angel investor and how I put a first fit in investing business. And then I went on the other side of the wall and became a VC, joined a European fund that I left just before summer, and now just joined Snaw, and we're a single family office, and we're handling all early stage investments for a prominent Web3 founder.
Thank you, Marjorie. Ferdinand, your turn.
Yes, thank you, Eric. Hello, everyone. So I'm Ferdinand. I'm 22 and still an intern at X Ventures for now 5-6 months. So started to be in crypto like maybe 1.5 years ago. Started with a friend who was doing like ICOs, IDOs, and doing quick bucks. So I'm get interested in it by doing this way. And since 1 year, I'm really involved in the crypto space and invested in few projects with my privately. And I've done 6 months before the first internship in investment banking. And during this internship, had a lot of time to make more research about blockchain and what is it about. So as today, really happy to work for X Ventures, and a lot of great projects coming next year and this year, of course.
Thank you, both of you. So it's really interesting for the people who are there today, because you have a different experience. First, Ferdinand, you are more a junior in the VC environment, and Marjorie, you have more experience. But I think the people today are looking for 2 informations: is how you invest in company, what are you looking for, which type of elements you are analyzing before investing in company, and the other part is how did you became or how you became a VC investor, because people can be interested to take your way and to become also VC partners or VC analysts in the future. So let's first maybe talk more about your previous experience. How do you join your company, and what is your daily basic your daily task as a investor?
Is it for Marjorie? Do you want to start, or I'll go ahead? Okay, I'll go. So I started to be first to be involved in venture capital. It's a lot of hard work. You need to make a lot of research, have good contacts in the ecosystem. To be honest, I get into X Ventures by one previous intern who gave me the contact of the manager. So then I contacted the manager, did like 2 or 3 interviews with him. It went really well. First, you have like a fit interview to get to know the human who's in front of you. And then I had more like a case study on DeFi. For me, it was DeFi. So really interested about this topic, and a lot of things to say about this subject. So yes, after doing those interviews, I had the luck to be hired by the group. And today, what is the daily work is more so sourcing, finding new deals to show deals to the investment committee, to the partners who are the CEOs and boss of the fund. What is a bit particular in our fund is that it's a private fund, so we have only 4 partners and no LPs. So no anybody is coming to bring money on the table, and we don't handle money of other people than our bosses. And yes, so because of that, we have a sector where we invest in Web3, all kind of Web3 project, early stage. And we have also like a business part, which is organizing a conference, an event for next year to make X Ventures, put X Ventures in the light, and create good contacts with the other actors in the ecosystem, so funds and also founders. And there's also another part, which is creating a new school in Germany, which will be like the X school. So we want to learn to high school students how to develop new projects on the internet, develop a website, and manage your money. So it will be a new kind of school, and we want to scale. We want to scale this all around the world in the few years incoming. And we also have a podcast, but I don't manage all the project, of course. So I'm really focused on the investment part.
So it's interesting because I think you will share something with Marjorie. Is you don't have LPs, as you said, so you don't have external investor in your fund. So you manage the fund of the people who created the fund. So you have
in our case we have four partners, German partners who are experienced in Web2. At the beginning, they made like 3 or 4 businesses in Web2 and exit some of them successfully. And so now they think like me, the Web3 will be really promising and the new big thing. So they came into this ecosystem 1 year ago, and today we want to really build like a real specialized fund in Web3, but also try to educate people through the X School in Germany we want to create, and also through the podcast to communicate with Web2 people to make them make it Web3 easier for them, because it can be really scary and difficult to understand at the beginning, but it will be, with time, we will gain people for sure.
Yeah. And just to remind, what is the size of the fund and the size of the tickets you invest in? Just to
so the size of the fund is 250 million euros. So it's quite similar to today. It's same as dollars almost. And yes, we invest between 50K to 500K euros, and it depends. It can be in equity or tokens. or mix. So we do both. Yeah.
Okay. So thank you for the first shot. Marjorie, maybe same questions.
Yeah, I jump in. So I came to investments from a different path because I was actually a founder and an operator before. So yeah, different path that come to being an investor. I think what described Ferdinand on the different, like the work, the daily work is depends on the stage of like in you invest. Like if it's early stage, you really need like good interpersonal skills and a little bit of analytical skills. But the more you go like later stage, the more the analytical skills are needed because well, you crunch more and more data and go deep dive, and the company has more history. So I think that's the skills are a little bit different. And me as a partner, I also have a role of representing my fund also, and so going out there doing like roundtable like this one, talks, being at events, and also of course like developing my knowledge and having a perspective approach on what will be the next trends, where do we want to go, and yeah, I think and it was very different because as I mentioned in the introduction, I was in a fund before and now I'm in a family office, so it was very different. In my fund I was investing like I was doing 2 investments per year around that, and like but it was a like could be a 10 million or more check, so it was a, but now I'm doing like smaller tickets, like same like 50 to 500k pre-seed seed. We go up to series A, but yeah, we cap at I would say 12-15 million size round, and but we are doing around like we about 4 to 8, even 10 investments per month. So
okay,
yeah. Okay. So the pace is not at all the same, and also like the way I invest is very different. Before I had a team, and I was also myself a lot deep diving, analyzing, because I was taking the lead of the rounds. And now I really do like one call. I do one call, 30 minutes to 45 minutes, and I just read the deck. And then if I have a doubt, I just call an expert from my network. If it's very technical, to have or a potential client, just to validate the value proposition. But I decide, like, my decision process is super quick.
Okay, so just an idea for the people who are there. So from the beginning, so meaning the time you receive the deck and you start to analyze it, to the funding day, how long it takes in average to let the people know when they contact you, how long they will take to have the funding on their side, if you are in the project?
Yeah, well, our decision process is about 2 weeks, because we have investment committees every 2 weeks. So, but we can of course be faster because we can work asynchronously. So my investor validates, like we are 2 at Snaw, and then my investor participates in the investment committee. So he confirmed the go, no go. And so yeah, usually 2 weeks. It can take more time depending also on the founder's needs, because there are raise that they go very, very fast and it's super competitive. So we try to give an answer very quickly, and others that take more time. So we're less in a rush because they're looking for their needs. And so as followers, it's, they're not focusing on us at the beginning.
Okay, very interesting. And Ferdinand, for you, it's between 2 weeks to 1 month. The decision.
Yeah, it's quite similar. It's It can be faster than 2 weeks, but it's really rare. Normally, we take the time to really analyze the project with all the team. On our part, every week we have like a meeting to talk about all the good projects we had and founders sent us, and then we all together have give our point of view about the project and see if we go forward with it. And yeah, it can be 2 weeks. I would say it's the average to give an answer to what the process at X Ventures is. It's 3 or 4 calls. First one to get introduced with the human in front of you who's building the project, who's going to explain the project. Then we have we analyze all the key info, so the team, the funding, what else? The tokenomics, which is one part that you don't have in Web2 VCs, but it's really important. And you have also the go-to-market strategy, which is really important. And of course, the project, if the project is good or not. And based on all this research about and this analysis, you're going to do another call, this time with the investment manager at X Ventures. Make a call during 1 hour, maybe, see if, again, we have all the details about the project, if there's also evolution, they have more news to give us. And then we go into investment committee. If we are 100%, we want to present the project to the partners. And when we're at this stage, it's going quite fast because partners will have interested or not. They have all the key info and analysis from previously from us. And then they see if they want, of course, invest or not. But we have 4 partners, so they can be only one of them investing, can be 2 of them, also all of them. So it's a really customizable custom funding.
Okay, great. So super interesting. A good transition from the chat. We have a question from Frederick, and I think we talked before together about that. Good transition. View the FTX situation. Do you think, and based on what you said, do you think we should maybe take more time and to make a serious due diligence before investing? So do you think it could change your way to analyze the project before investing? View all the stuff we can see today with the FTX, but other projects also who are not really serious at the end. Do you think it will change your vision or your manner to proceed after that? Maybe Marjorie.
Yeah. On my end, no, not at all. Well, again, it depends on the stage you're investing in. So when you do pre-seed, there is just a team and a PowerPoint. So there is not, I mean, if you know the market and the analysis is there's not a lot to analyze. So but being careful of like maybe what you're investing in, like all this app that favor like encourage speculators and trading for speculation. Like for instance, this we don't look at it. So if you choose well, like where you want to invest, to me there is where, like what segment of Web3 ecosystem you want to you're interested in investing, and also like what stage of investment. Like the more, for me, the more it's late, the more it needs some analysis.
Okay, so that's right. That as you said, at early stage. So based on the question on FTX, I think if FTX was presented as early stage, anybody could have invested because the project seems interesting. After the bad point is when a Sequoia or more strong fund is investing at a late stage, so in Series A or B or C, knowing that maybe the business model wasn't really solid, That's where the bad point is. But at early stage, I agree with you, Marjorie. We don't have a lot of elements to judge. Instead of maybe making some analysis on the go-to-market, if the people will be willing to pay the product, and if we will find the market with our product. But compared to FTX at the beginning, I think the first investor were right. It's more the people who invested later in the company who were.
Yeah, I agree for sure. I mean, later stage investors should definitely like due diligence the business they're investing in, like, of course, and go deep dive. But on the other side, I don't know, but there's a lot of like FTX is a kind of a scam, and Sam like hide a lot of things. And sometimes, you know, even like when you do due diligence on the base of the paper we give you, and calls and ref calls around it. But if the guy has, and it's definitely the case, has built like a sort of Ponzi and non-transparent business, well, you know, the fund is not always guilty of not having done his DD well.
Exactly, I agree. Ferdinand, maybe
and maybe it's not only about the VC team behind, but also the regulation. Maybe need more regulation to in this market, even if it's also a bit negative on some points, because we want that it's to be like decentralized. This decentralized notion is the main features of Web3. So if we put too much regulation, it will maybe kill it. But if we don't have regulation, there's no limit. So, and more scams like FTX. So we need to find the right balance, I think, with regulation to make sure that will not happen again. And yeah, but honestly, all the big VCs like Sequoia have, I think, brilliant team in those VCs. The thing is, they had really, we were in a period of like a bull market before, so a lot of liquidity. So valuation was like all-time high before. So yeah, maybe a bit of euphoria and a bit of lack of regulation.
Yeah, agree. So again, to continue on what you explained before, so Camille on the chat is asking something interesting. Is we know that the team is maybe one or the most important element you need to check, especially at early stage. Do you think, how do you judge the team of founder? What are you looking for in the people who are creating a business or a project? What are your criteria, especially on the team? And the question from Camille is the age. If someone is too young, is it something bad or not for you?
Okay, I'll go. It's not about the age, I think. You can be someone at 20 or 20 years old, and he has a really great vision, passion for the ecosystem, and he's bringing a super great project. And if he behind by raising funds, he can hire a great team with more experience, and then it's no more about age, but just have really a great vision, be well, have a good team behind, and bring utility, of course, to the people. So if you have a utility, a great project that will solve a problem, it will be every people can raise funds, of course.
Okay. Maybe Marjorie?
Yes, on my side, what I look like is first what has done the founder before, like is he or her like she or repeat founder, like so this is super important because usually repeat founder are kind of sexy in VC because they know how to like build a company and go through different phases. Also, like, yeah, in the background, like, did they go like I don't know, study or make an internship like abroad, like internationally, because this shows well the will to discover other things and be curious and open-minded. So, and then during the meeting is also the founder market fits, like does he or she already know this market, how he's like orchestrating the solution to the pain points that has been identified, is or she is structured. Like also me, I have very like little short calls, like 30 minutes, 40 minutes with each founder. So I really like founders that are time managing sensible. When I say like I have 30 minutes and the guy is still talking to me when there is just 1 minute, this is a very bad signal for me. Like I like entrepreneurs that are kind of structured. So the behavior, like the respect of your time, they're like asking you questions also, like do you have any question, giving you a little bit of space in the discussion is super important. Sometimes they just like, I have to interrupt them to ask a question, and so I feel bad, and so just giving a little bit space. And yeah, this I would say would be a bit like weak signals. You know, it's more the behavior during the calls that's actually what have been done before.
Okay, so and to confirm the age, too young or too old, in the two ways, it's not a criterion.
No, not at all.
Okay, so that's great. And especially on the go-to-market, and maybe Marjorie, as you invested also in and you invest in Web2 and Web3 projects, we often wait to have a few MRR, so monthly recurring revenue in Web2. In Web3, it's not often that people have first clients. So how do you judge, especially the go-to-market with no revenue, to say, okay, you will have a lot of clients? Do you just analyze the pain of the clients solved by the product, or do you maybe ask the first client you ask the company to have the startup to have the first client, or how do you manage this?
Well, in what you say, for me, there's two things. When you talk about recurring revenue, it's more for me the business model than the go-to-market. So yes, it's in Web3, it's not often a like SaaS model, so recurring revenue, but that's okay. And the go-to-market is, yeah, it's important. Like usually, like founders come with a POC, so proof of concept, or a MVP with some like survey, some tests. So I like actually going into the metrics of this POC, like how did it go, how the client, and it depends on the, you know, on the industry, on the product. Like if it's gaming, the metrics won't be the same that if it's, I don't know, a DNVB or a cyber tech company, or so it depends on the metrics. But I would say like analyzing the POC metrics, and then like asking the question like what is your strategy to acquire clients and to build actually a growth like machine, like acquisition machine, because it's this that will ensure the scalability of the business. And I think there is different answer to that depending again on the business. And I just have to be convinced about the approach, but it's okay if it's not like now, you know, it's okay if it's first we'll do some R&D and then we'll acquire some users and then we'll just think about the business model, but just or we'll monetize, but it doesn't mean that you don't have to think of how you're gonna earn some money before, even if it's changed after. But I think to have this in the head and like think about sales is super important.
Okay, great. So Ferdinand, maybe same for you, or
concerning the go-to-market strategy. It's similar because we don't have financials to base our analysis on. So we really need to understand how to onboard Web2 people in the Web3 ecosystem. So that for most of the project that brings utility to people, it's the biggest challenge to onboard Web2 people that doesn't know a lot about Web3. And yes, it's more about how to launch the project on platforms, but yeah, it's really about the strategy and the vision of the team, and not you can base your analysis on data. That's the only thing
And
difficult.
Usually people are coming with a business plan, as we can see in at least all the Web2 projects, or they are coming just with ID, PowerPoint, explaining something technical, but with no projection of cash flow, etc.
No part there. No, I've never seen cash flows for the moment.
Okay,
maybe twice, but it was more about projects going into a Series A fundraising. So that's not our part. We really do pre-seed and seed round. So, but the projects, they have a pitch, maybe the average it's 10 slides with the team, they present the project, the solution, what's the problem they're resolving with the solution, how much they want to raise and for what, because you don't raise money just like this and for no reason. And also the go-to-market strategy, of course, it's a key element in the pitch. So we at Xventures, I know that we like to have a clear pitch deck with 10 to 15 slides that present really clearly with maybe maximum 3 or 4 bullet points per slide, and not like big text on each slide, and really keep it simple, easy to understand. And even if you don't explain all the tech part, it's not a problem at all. You will, if we need more understanding on the tech part, you just have a meeting with the CCO. Sorry, there's a plane going in there. And yeah, we just need to have a call with the CTO or another team member, and he will explain orally or show us how they do, how it works, the project, for example, a protocol, which blockchain they use, etc. And sometimes we have a lot of GameFi projects, so they show us betas of gaming projects. We have also a mobile applications, so they show us little designs of the app, but not, it's only the few, like only demos and betas, yes, but you never have a final project in the pitch deck, I think.
Okay, great. So, and Marjorie, so it's interesting. Do you think, because personally, I don't know if it's relevant or not, but we can see, or we can notice that between Web2 and Web3, time after time, Web3 is coming back a little bit on the type of presentation or type of pitch in Web2. So that's right, that for now, not a lot of project and close to no project presented the business plan and the figures, etc. We know that in Web2, most often it can be considered as bullshit figures, but at least it's maybe to check if the founder have an idea of what they expect as a financial in the future. We know that the figures are projected like a random, but at least they are projected, but we won't have exactly these figures in the future. But do you think in Web3 projects, people should come with at least an idea of the financials they will have in the next years, or if it's not relevant at all, at least at early stage?
Well, I would say that even in Web2, I don't receive any forecasts on the financial side sometimes. So again, if it like really it's pre-seed, I would say it's really the team and the market, like is the market like deep enough to create a huge company. Because what I observed is that a lot of company, like the product changes, it evolves in time. So they can pivot like 2 to 8 to 15 times. So you can, for me, I'm not, when I invest, I don't say I invest on this product. I invest first on this team, on this market, on this segment, because I think it has a great future, but the product, it would be like, it will probably evolve. So I think it's so forecasting on a product that will not be the same in 6 months, 12 months, 20 months, it's a bit dumb. No, I don't know.
No, that's excellent. I think it's really interesting to tell this to the people who are listening, because maybe during the training session with the Web2 approach, they ask you to work a lot in the figures, on the, as you said, on the projected cash flows, and a lot of different figures. So it's interesting if they run, or if they work on a Web3 project, they can save time avoiding these parts, at least for the early stage, and maybe put more energy on the team presentation and on the project. So that's really interesting, I think, for the people.
Yeah.
I think it depends on the. Okay, sorry, Ferdinand. Go ahead.
Go ahead, Marjorie.
Okay, I think it depends on, again, on like the stage, and also maybe who are they talking to. Like usually early stage investor, they shouldn't, and they don't really ask for a lot of forecasts. It's more like PE later stage investors that ask for that, and sometimes they can ask for it, but it depends on the size of the round. Because, for instance, we just invested in a company like Web3 company. So I can't say the name right now, but it's basically a neobank, like solving like on and off ramping issues and concerns. Like you have a wealth that is composed of crypto and fiat, and you want to use wealth, like even like stake your fiats and buy your bread or an apartment with your crypto, but easily. So, and they raised for the pre-seed 12 million. So this is, I mean, for certain company, it's a Series A. So maybe there are companies, like if they raise a lot, like the leader, like the fund that will lead, will maybe ask for the team to work on the forecasts, but it would be more like an exercise than really like the true numbers. It's more like how do they structure, how are they structured, and like we'll really do that, at the end of next year.
Okay, great. And Ferdinand, you wanted
to... I just wanted to bounce back on the market size, which is a really important part of the pitch, because we have to know that in VC it's really risky. So we are maybe screening 100 projects and only investing in only one. So the thing is, the projects needs to have a really big market size, because we need an explosion at the end of the 4, 5, 6 years of investment to really have a return on investment that would be worth it, and really like secure all the other investment that wasn't that good, and also make revenue for the fund, of course. So that's why the market size is really important as well.
And on the market size, it's not difficult, especially as of today, to define what is what market size in the Web3, because today what we can say is NFT or whatever. It's the market size is based on the market studies, who are saying in 5 years the market will be there. And on crypto, we had an idea of the market size, but 1 week after, the market size is divided by 2. So how are you confident with, especially on the market size, depending the type of project we have? Because I guess metaverse also, we had a big hype. Now it's more down, but it will coming back in a few years. So how do you feel that? Or how do you judge this?
Just waiting to the announce.
At the time we have the announce of the flight.
Yes. So for the markets, we need to trust the numbers coming from big consulting group, like the big fours. Really often the the datas, where are the datas, and trustworthy datas. And also, as you said, there's not only metaverse, there's also a lot of projects related to gaming. So if you look the gaming industry, you can base your analysis for the market size on the gaming in Web2 and not only Web3. So it gives you also like a range and a benchmark. And for the metaverse, it says more about how it will statistics and how it will evolve in the future years. How many people will want to be part of this new technology? So I agree that it's sometimes maybe too optimistic or not enough. Who knows?
Too early, maybe too early.
Or too early, of course.
It will come, but maybe in a few years.
we have time. I think we have time.
Okay.
But
And
yeah.
Marjorie, for the market size, same for you. It's is it something important on your side, the market size, or it's
Is it something what? Sorry.
is it something important in your analysis, the market size, as it's not
Yeah.
easy to define, especially in Web3, except as Ferdinand explained, by the market studies through the audit consulting group, etc.
Yeah, no, I agree with. Yes, of course, it's important, and I agree with what said. And I'm not super comfy sometimes with this segmentation about Web3, Web2, Web3, because I think there's a lot of like bridges between the two, like especially in investment. And like, of course, like Web3 is the continuum of like the internet, Web1, Web2, because there's new features and new thing you can do. But in investment, like for me, like a lot of companies I've invested in Web2, it would say, are using now blockchain as a technology to like they're using the smart contracts, for instance, or like some of the thing, like just the NFTs, because they want to authentify something in the company. So like for me, like is a technology, and of course there's all the crypto markets, but not like, yeah, I think it's a bit different sometimes, and we put everything in the same basket, and yeah, I don't see things like that.
Okay. And maybe to finish on the market size, because I see a question from Jeremy on the chat, is on DeFi. Are you going in really in detail to analyze the market size, meaning are you checking the lending, borrowing, the DEX, the farming, etc. At your level? Are you doing this type of deep analysis of especially for DeFi products, or is it not possible to analyze so deeply the market size, especially on DeFi?
Well, for me, it depends. Like usually what I do, because I don't have like a team, like I don't have any analysts like Ferdinand. So and I have to take like quick decision, and this is my role, and this is what is expected from my clients. So I do usually is I work a lot with other funds, and I use the investment notes of the lead fund, and where usually, yes, there is a detailed market sizing analysis, and so what's important about the market is also all the M&A, like the merger and the acquisition that has happened in the few like decades, the few last 10 years, yeah, to know if the market is liquid, because sometimes the size of the market can be good, but there is nothing, there is no acquisition, no exits, no mergers. So do you want to go there? Like, because at the end, as investor, we want to exit sometimes. So, and after the second part of the question was DeFi, like especially DeFi, yeah, just when there's an analysis, like I my decision on this one, but if there is no analysis, I come back to other fundamentals, which is the team, and just globally the idea of market. But DeFi usually is at the end is a lot of decentralized applications such as lending, saving, exchanging, payments. So it's Web2, Web3, it's the same. Like we need to pay in both, you know, So the market sizing for me, it's a bit the same.
Yeah, pretty clear. Ferdinand, maybe.
Yeah, it's a bit similar at X Ventures, and for me, every day we don't watch all the details of data about verticals going into like lending, borrowing, or DEX or farming. Even if I have a really great analyst in my team who is doing stuff like this, but he's not doing deep dive every day in those kind of datas. But of course, as Marjorie said, we really focus on the key info we have. It's the team, the project, what is it solving, the market, tokenomics. It's the only difference with Web2. We didn't mention too much this, but it's a really important thing when you have a token in a project.
So
and also
at the end, it's the equivalent of the financials. At the end, the tokenomics are replacing the financials. Yeah.
Yes,
if you have a token
in a way.
Yeah.
But it's quite new and sometimes difficult for team to fix. They don't have experts in this domain, so that's also our role to find an expert in tokenomics and make to have his point of view and how we can improve that economics. And yes, so that's an important thing. So really stay focused on the basics, and it will work well, I think.
Okay, great. And so maybe so the last question of the main presentation is if you had to give one advice, one or several advices for the people who are looking who are watching us, it's for their pitch. Which advices you will give to them? How do you what are you waiting from them? What are you liking when you have a presentation? What so if you can give some one or several advices.
I'll go ahead. So what we really like for founders who are listening to this webinar, we really like and appreciate that the pitch deck is simple and clear. So as I mentioned before, like put 3 bullet points per slide is really good and really make it easy for us to understand, not too much text. Provide a solution to a problem, and a great solution is even better. And have a market size, a huge market size, to have the explosion at the end of the investment to get our return on investment. A clear vision from the founder, and of course, the founder has to be humble, and if he runs after funds, I think it will not work. You don't need to. If you send messages 2-3 times to a fund and he tells you to wait, there's a reason behind. So don't rush. Don't call every day the funds. They will come to you if they are really interested, and they will. You will save time for them and also for you by finding the right investors who's really involved in your project.
And especially as you said, your time of decision are really short, so that's right.
And
people are reaching you, even if you have a short delay in answer, it's a little bit annoying.
Yeah. It's a bit annoying, and as Marjorie said before, during meetings, the founder needs to be structured, have maybe a 3-minute pitch maximum, make it really simple orally, but also on the presentation, and at the end have time to discuss and ask questions. Let us the time to ask also questions, because it's not obvious for us when like a developer is bringing his new project, his new protocol. It's not always easy even for us to understand. So yeah, take the time, be structured and clear.
And are you also interested in projects led by only one founder? Because in Web2 or other companies, usually we like to see 2 or 3 founders. In Web3, are you do you see also people who are coming alone with no team, saying I have a really smart idea, this is my project, and you finance at the beginning, the start of the
honestly, it's been 5 months and a half I've been at Xventures. I've never seen that, but I'm sure that it is possible. I would not be surprised. But if the founder is the really big, we only do early stage investments, so of course it's possible that people are still alone and don't have money to hire people. So that's why we are there to invest money. It's not only about return on investment, but also give possibilities to people and create great projects. So yeah.
Okay, so that's interesting. And Marjorie, maybe
yes. Yes, I agree with all what said Ferdinand, and maybe to complement a little bit, to add up, I'm pretty sensible to teams that are complementary. So I like to see someone in the team that is more salesy, more business, than just, because often in Web3 there is a lot of only tech team, and then it's hard for them to sell. So, you know, like Mark Zuckerberg, there is one, like he managed without like being at all salesy at the time to just build a huge company. But there is not like a lot of companies that without a sales guy or woman like works. So I like having someone is more on the vision, on the business, on the sales, on the interpersonal skills, and someone that will really like someone on the tech, of course, and someone that will be like on the execution, on delivering, on doing, you know. So that's super important. Also, I like teams that are data driven. Like for the anecdotes, I had a call lately with the founder, and they actually have a few years of existence. And when I asked about their metrics, so he didn't know he was the CEO, and he wasn't able to give me his metrics. Like it was in the gaming space, so it was basically the gaming metrics, the installs, the DAU, the MAU, the sessions, just like gaming metrics, and he didn't know them. I was like, for me, it's really a red flag. Like you're the CEO of the business, you're raising funds, and you don't know your figures. That is a big red flag for me. And what else? Well, maybe as I said a little bit in the introduction, like the behavior, like during the call, during all the discussions we'll have is super important, because it actually tells a lot on like how this person is behaving with his co-founder, with his employees. So yeah, the way you behave with us investors will be the way you behave probably with other people. So and I prefer like a founder saying like I don't know to one of my questions and coming back also later after with an email, for instance, than just like knowing everything. And it's okay. Just if I have maybe one advice, it's okay like not knowing everything. It's just after like being able to come back with the right answer. And yeah, and about your question on solo founder, we don't do usually a lot of solo founder, but we're not like totally like close to that. I actually wanted to invest in a solo founder company lately. So it depends on the founder, but it's true that usually like it's easier. As actually a former founder myself, it's I did in my 2 companies. My second one, I was a solo founder. Well, kind of. I had a little bit like a lot of my employees had ESOP, but no, didn't have a co-founder. And my first one, I had a co-founding team, and it was super hard. So it's just for you, even for you, for your journey, it's like way better to share it with other people. Okay. And maybe like the last advice that is the same for Web2, Web3, just founding a company, like have fun, you know, like have fun with the people you work with, have fun in what you do like every day. And that's for me is the best advice. Like if you find like you're not having fun and it's like hard, like of course you will have hard times, but I mean, just on your daily basis, you don't have fun and it's a pain. Well, maybe it's not the right business for you, or maybe it's not the right persons you're working with, but just, yeah, think about that.
Excellent. I think it's a lot of great advices for the people here, and especially the one you mentioned, because I saw a lot of people saying, I'm not a tech, can I launch a business in Web3 because I'm not a tech? But as you said, I think they need in Web3 a lot of sales managers, more commercial people, and not only tech people, because at the end you need to sell your product. So it's a really good point you mentioned there. Thank you both of you for the time. I think we took more time because we took the question at the same time, so that's great. We are good at the timing. If people want to reach you, I think Ferdinand is a LinkedIn you mentioned, or by email or LinkedIn, it's great. Marjorie,
LinkedIn is perfect.
Same for you, LinkedIn, or you prefer by email? How the people can reach you?
Yeah, LinkedIn is fine, but maybe just mention in the subject that it's from this roundtable, because I receive a lot of messages on LinkedIn, and like this, it will help me like just filter and maybe prioritize if I see it comes from this meeting.
Excellent. Thank you both of you. In any case, for the people, don't hesitate to subscribe to our channel, because we have several events who are coming in a few weeks and a few days. And I hope we will see you again in in the next meetings or in real life. Thank you, both of you. Have a great day.
Thank you.
Thank you very much.
Thank you, everyone.
Have a great evening. Bye-bye.
Bye-bye.